Hello everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is Friday. Nice update today on the market, and it looks like we're still in this uptrend, which is good. The overall trend, of course, is down, but the uptrend, it seems to be here, at least in the short term. So I want to go through some of the stuff that I did today, and maybe that would be of interest to you. Let's see. Let's go back here to the top, and basically, the Nasdaq was up today, which is indeed a good thing. Also, we had some nice action on Tesla. It looks like it's come above that 200-day moving average, which is really interesting and good. So let's take a quick look, just quickly, at Tesla here and get a look-see on it. Have it a Chenier, but we want to go to Tesla. TSLA, of course, is the symbol for Tesla, and it is going to be splitting 3 for 1, and you have to be of record by the basically by the 17th. But very interesting. I've been building a position, as you know, in Tesla. And we'll see if it continues up. I probably will go a little bit longer. I'm going to be selling it basically right when we get to basically when we get to the number, which basically in this case is it's going to be, hopefully it's going to close between 900 and 1200. We'll see. I mean, we'll see, but we do see some nice action on it. Relative strength is 96. I'm going to kind of show you the 30-minute chart here, and we definitely had pretty much the whole day from the end. We had some nice buying. We had some buying coming in at the end. That's this bar here, which indeed is a good good thing happening there. So not shabby at all. So hopefully we're going to see some more action there. And right at the end of the day, of course, we had some buying come in, and we've had this nice little run up here, basically from about 860 on up to about 900. My average price is about 880. Not terrifically. I wish it were a little better than that, but beggars can't be choosers. So that's kind of the long and short of it. All right, so let's get into some of the other stuff here. The stock of the day today is Analog Devices, ADI. And it's an interesting stock because, as you probably know if you follow semis, many of the semiconductor firms outsource their fabrication to a company called TSM, Taiwan Semiconductor Manufacturing. And of course, they're under threat by the Red Chinese because Taiwan Semi is based in Taipei, Taiwan. And of course, they're under threat, unfortunately, of potential military actions. So many of the companies that are in the semiconductor space that do use TSM, such as AMD, NVIDIA, something like that, they're sort of vulnerable to the supply chain, whereas on semiconductor and ADI, Analog Devices, they actually make their own chips in the U.S., so they are seeing an advantage. We're seeing a movement out of some of the oil stocks, well, not really out of the oil stocks, but we're seeing renewed interest in some of the semiconductor stocks. As you know, the first 2 quarters really have been dominated by the oil stocks, but now we're seeing some movement into some of the semis. And it does look like with Analog Devices, I bought it today as it was coming up here. It's got a 100% checklist. Just want to put that out there. There is a buy point on it at 191.95. That's on a cup basis. If you follow the Can Slim methodology, as I do. And we're well above the 200-day moving average, so it's looking pretty good. We're looking like we're getting some institutional money coming in. Currently, we are about 2.56% above the 10-day line, so it's trending very, very nicely. We just hope it doesn't get too far ahead of itself, but it had a very nice day today. And let's go over the 30-minute chart to kind of give you an idea of sort of how it traded today. And there we go. And as you can see, it basically right from You know, right from basically the beginning of the day, we moved up. Not a whole lot, about you know, from about 174.50 on up to about 180. So, but pretty nice, some good volume. There are a lot of day traders on this one, so be careful. And we did have a lot of selling at the end of the day, as we do with stocks like this that are sort of in this area. So, just one thing you want to possibly be a little bit careful on. Also, wanted to show you the stock of the day. This is the IBD stock of the day, and this is United Health. I'm not in this one, but it did. But it does look pretty good. This is more of a safety play. A lot of you know, this is where a lot of the big funds are hiding right now because it's been such a volatile market. A lot of them are hiding in these sort of what I consider, you know, very large cap healthcare. And that's definitely been the case here with United Health. Let's see, for everybody on TikTok, let's show that camera. There we go. This is the chart for United Health, and it does have a very high relative strength of 92. One thing I am a little concerned about here, though, is that the relative strength line is declining, and I don't like to buy a declining relative strength line. Currently, this stock is in the top 8% of all the stocks currently trading right now today, as of today. But we're definitely above that 200-day moving average, above the 50, above the 21-day exponential, and we're trading right about at the 10-day line. So if you're interested in healthcare, it's a little bit more of a safety play. I'm not in this, as I said. You might want to look at this one as well for, you know, some, you know, if you really just are feeling that you have to be invested. I'm not totally invested right now, and I'll give you just to take a look at the small portfolio that we have here. The small portfolio, of course, is a demonstration portfolio that we trade here at Dallas Trading Floor, and as you can see, we are up on everything today, which is very nice overall. There's only 4 stocks in there. One of them is called Celsius. That's an energy drink company. It's doing very well. Symbol on that is CELH. Then we have also Petrobras, which just announced a very large dividend. That's an interesting one because it's a Brazilian national oil company, but they did have a very large dividend, significant there. And then again, I indicated that we were in on semiconductor, and then also we have a position in Ollie's Bargain Outlet. Ollie's Bargain Outlet, of course, will benefit from many of the larger, more expensive stores. Right now, Walmart, Kohl's, and all those other stores do have quite a bit of inventory. They're trying to get rid of it. This is what Ollie's specializes in. They're a liquidator, and so we're hoping that will be a good look at that. So let's take a look at the chart for Ollie's. OLLI, of course, is the symbol for Ollie's. Let's go right over there and put that up. And for everybody on TikTok, I'm going to switch the camera so that you can see that chart. As you can see, we came in here with a full position. Basically, it's 65, which is basically 65.67. And guess what it is today? 65.67. So zero movement on this one. Zero movement on this one in 3 days. So not, you know, it is what it is. Hopefully we'll see this thing move higher. But basically, we haven't lost anything. We haven't made anything. Kind of amazing. Ollie's Bargain Outlet. All right. Let's also take a look at everything currently that I'm holding. And that's a fairly large list, of course. We have Exxon at the top of the list. We're up a little bit on that, down on the volume. Cheniere Energy, this is one I also want to kind of highlight here. Let's look at that. It's called LNG. And LNG, Cheniere, is a firm that liquefies natural gas primarily for export to Europe. And interestingly enough, of course, Europe is very short of natural gas right now with the cutoff of the Nord Stream 2 pipeline going into Germany. Interesting thing about this, they are active here in Texas. They have 2 natural gas trains, one, of course, in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas, where they take gas, they gather it, they then supercool it, put it on ships, and ship it over to to Europe. Interestingly enough, the Netherlands has a port to receive this, but the Germany does not. Poland does. So it's going to be a very cold winter, I'm afraid, in Germany this year, because unfortunately they did not make the decision to create a natural gas port. But to Poland did. Very, very wise company. As you can see, we're up. We're right out of the buy zone on Cheniere. Currently, it closed at 158.69. It was up about 2.5% today, with about a gain about 4% in the volume. So I've been watching this one and buying this one for a long time. The pivot on this one, the buy point as it were, in CanSlim trading was at 150. So we're above that pivot. We're just a little bit above the buy zone. Still, I think you could get in on it here. We had a very, very large amount of volume come into this stock after the earnings. The earnings were pretty spectacular for Cheniere. They were up basically 323% quarter over quarter, which is absolutely amazing. And of course, their sales, and that's the key, were up 165%. So, as William O'Neill once said, if you can get a stock that goes up 20% a quarter, you definitely want to take a look at it. That's definitely the case here with Cheniere. Symbol on this one is LNG. So you might want to take a look at it, based in Houston, Texas. So interesting stock as well. All right, before we get to the questions, I'm going to show you, I think, yeah, this is one that we're looking at. We look at the Vix Volatility here. I wanted to kind of show you this one. You're not going to be able, unfortunately, to see this on TikTok. But if you jump on over to YouTube at youtube.com/Dallas Trading Floor, you're going to see the chart that I'm looking at. The volatility in the market has been declining, which is a good thing. So we do seem like we're at least in a bear market rally. Now, we are not in a bull market. We are in a we're in a rally on a bear market. The trend has not adjusted. We are still in a down market trend, but as you know, when you have down markets, that's when sometimes you have these movements up. Now, here's the thing about trading a bear market rally. You want to be careful because they tend to be more intense than in an uptrend. So, very kind of a difficult one to trade. Take a look at this spider. Of course, this is the S&P 500 ETF. And let's take a quick look at it just to kind of get an idea and kind of orient here. And I'm going to move over to, on YouTube, I'm going to move over to that. As you can see, we're in the secular downtrend. Really started in November, but we are in this upward motion on that. We still need to kind of reverse higher. It's not, we haven't put in the bottom yet. And so, right now it's a good time, if you do have profits, to consider taking your profits now, because I do believe that when we come up to that 200-day line, we're going to probably see a little bit of a pushback here, but who knows? I'm hoping it'll trade above that 200-day line, and we will see kind of how that is. So if we take a look at on YouTube, so let me pull the camera up for YouTube, so as you can see it. Here we are, basically coming up with an upward trend on the spider. This is the S&P 500 ETF. We're not quite at that 200-day line. That's sort of where I think we're going to get resistance, and then hopefully if we can move past that, we will definitely move higher. Right now, that resistance on the spider is currently at, I believe, at about 430. Currently we're at 427, so we're pretty close to it. That's where I expect to see a little bit of a pushback. It's going to be about 430 on the spider, and then we may reach that next week. So be cautious at that level on the spider, and that will give you kind of a signal whether to be all in or not in the market. Now, I'm not currently all in, as I say. I'm about 45% in cash and the rest in the market. I'm just trying to let the market show me where I can come in. And there we go. All right, Sam is asking about PBR. This is Petrobras. This is the stock that I was talking about. This is the Brazilian National Oil Company. And basically, I was scratching my head this morning. I was looking at the stock action on this one because I own it. I own 1.5 positions in it. And I was scratching my head and I was saying, well, why is that pulled back so much? Well, I found out the reason. The reason is a massive dividend, $1.20, almost $1.29 dividend. This is essentially a $13 stock. So it's tremendous dividend in this stock, and that is payable, by the way. That's payable in September. It's going to be, I think, September 5th is when that's going to be payable. But that's the reason the stock adjusted so much, and it was really shocking because, as you can see with my notes, on the 1st I bought one full position at 14.04, and I'm going, well, wait a minute, I don't see any down red bars, but yet it's all the way down. Well, I did a little bit of research and I found, wow, this is the ex-dividend date. So this is an interesting company in that they pay huge dividends, very unlike American companies, but this one is very interesting. The last quarter that they did just come through, that closed on the 22nd of June, their sales were up 46%. That's pretty amazing. Profits were up 111%. But what changed the price on this one was the issuance of this extremely large dividend, which basically came in at $1.29 per share. Very, very interesting. Interestingly enough, with this one, and we're looking at the weekly chart here, we're seeing that this one has an unbelievably low PE ratio of 2. Can you believe that? 2. Now, obviously, if you've been trading stocks a while, you know that that is just an unbelievably low PE ratio. That means that the earnings are about, for every dollar that you invest, you get 50 cents back. I don't know if that'll hold or not, but it is, the price is quoted in Brazilian reals, and of course it's being translated into dollars, so that has a little bit of, there's a currency exchange effect on it. Very interesting stock. Most of the people that hold this are in Brazil. They're not so much in the United States, but we do have funds holding it. About 472 funds, and that's up basically. At the beginning of the year we were about 410 funds, and now we're at 472. So it's a very interesting stock. It's a very interesting setup. We did have this week was very strong for it. It is a 98 relative strength, which means that it's in the top 2% of all the stocks out there relative to the market. So the market is not that strong, but relative to the market, this one's doing very, very well. So if you do have this one, I definitely think you probably want to hold on to it. I definitely am holding on to my shares. Again, I have about 1.5 positions. Unfortunately, we're past the point that we can buy it. Really, the pivot on this one is 1236, and in Cancelim world, that is you don't want to buy more than 5% extended from that. So really, unfortunately, we can't buy this one now, but fortunately I was able to get in with some of the positions. I had to readjust my notes because I had to subtract $1.29 for the dividend that will be paid out. But interesting stock, and definitely one that I think bears looking at. But right now I think it's a little bit extended, and so probably not a good place to buy it. It's about 10% above the pivot, and typically you don't want to buy that high above the pivot. 5% is pretty much the max on that. So interesting stock with that. So thank you for that, Sam, so much. Lisa, thank you very much. Spider, QQQ, IWM. All right, well, let's look at these. Are all these stocks, by the way, all of these three areas are indexes. So what I'm going to do here is we're going to look at all of them. First of all, what I'm going to do is I'm going to put together a chart here for the QQQ and the Spider and the IWM, and let's do that really quickly. Let's compare them here and see. Okay, so here we go. This is the QQQ. Let's put in the Spider, and let's put in the IWM. All right, there we go. All right, so, and I think we have them all in there. I think we do. We have all three in there. So let's. Boy, I tell you, Did I get the I? Let's put the IWM in there. All right. All right. Okay. So if we what I'm doing is I'm just shifting over to the comparison chart here that we have for these. The black line is the QQQ. That is the Q. The spider has done a little bit better. Has done a little bit better than that, and unfortunately the Qs and the IWM are basically the same. I don't know if you can see this. Really hard to see this, but they're almost exactly the same. The spider has outperformed this year. So if you started this year with $1 and you invested it in the S&P 500, and then you invested another $1 in the Nasdaq, and you invested another $1 in the Russell 2000, you would have been down about 4 cents on the spider, about 10 cents on the QQQ, and on the Russell 2000. So the indexes this year have underperformed. They've underperformed. So not kind of the news you probably want to hear here, but actually the number one asset in terms of an index this year, believe it or not, has been cash. And that's really a strange thing when that happens. But cash has actually been the best investment if we didn't have it in an individual stock. We just invested in an index this year. Very interesting. All right. Now, if we invested in something like some of the oil stocks like Range Resources that I want to show you here, we would have done a lot better. There's a stock that I do own. It's called RRC. And this one is a oil and gas stock. As you can see, it's doing pretty well. It's come right up to a buy point. I've been buying it basically about a half position as it moved higher. And I want to compare this one to the QQQ, which is the Nasdaq 100. All right, so here we go. So this is Range Resources, and let's compare that to the Qs, and we'll show you kind of what's been going on this year and why the oil stocks have been so darn good this year. But let's take a look at that. So I've got to get the right one in here, and I'm just switching over to the comparison. And here's, flip that over the camera over for everybody on TikTok. Here it is. Basically, if you look, you can see the QQQ is way down here. It's again about 95. So if you invested $1 a year ago in the Qs, you would have about 95 cents. But if you invested in RRC, Range Resources, one of the stocks that I do have, you would have had a $1.40 gain, so 140% gain. This is the difference between the oil and gas sector and the technology sector. So these are kind of proxies for them. So you can see how much better some of the oil and gas stocks have done. Now we're starting to see in the third quarter, as we're getting close to the third quarter, I do see a movement into a little bit out of the commodity oil and gas stocks into some of the semis, but not all of the semis, only the semis that were fabs. So I do see a movement into some of the semiconductor, into some of the semiconductor. Let's put the just to show you kind of what I'm talking about here. Let me put in the index for the semiconductors. This is the semiconductor index, and there we go. I think you can see it. It's sort of right on the Qs, kind of very much on the Qs, but I do think it's starting to accelerate as well. Range Resources, of course, it's up 130%, 35%, which is excellent. The Invesco QQQ is down, and the semiconductor index is down less, but there are some good stocks in there that we can take a look at. All right, thank you so much, Lisa, for that. Let's look at Tesla. This is really the big one. And as you know, if you are a member of the Action Trade Alerts, and of course that's very easy to do, all you have to do, and it's free by the way, so that's even a better thing, is you need to go and make sure that you're signed up at www.Dallas Trading Floor. And I did send out, we have been building a position in Tesla. As you know, it's splitting 3-for-1. The date of record on this one, and I did put out a video on this today, very short video, and that is, it is building a position and is over 900. It closed over 900 today. That's a key level for Tesla. The next area of resistance for Tesla is at about 1201. That is the actual buy point on it. We will see how well it does. The thing about Tesla is there's a tremendous amount of what they call overhead supply. So as the people that bought it higher than 900, as it moves up, they're going to be selling it. But I don't think they're going to sell it until after the split. So my strategy on this one, on Tesla, is to purchase several positions and then move it up and then probably sell it on the day that is going to split 3-for-1, and that's of course August 24th. So that's kind of how it's going. My average price, not that great. My average price is about 860 to 880. Currently it's trading in about 900. That's in a few days. I think it will continue to move up, probably above the 200-day moving average, but I wouldn't hold this one a long time. This is very much just a swing trade. We want to hold it. We don't want to get the extra shares. You know, as it moves up above about 913 or 915, then it's going to be above the 200-day line. In this current move, the highest that it has gotten is about 936. So expect to kind of start unloading as we come into the end. Expect to kind of start unloading as we get past the date of record, which is of course the 17th. And I would not hold this through the 3-for-1 split, because typically what happens, people get shares, they sell them off, and it depresses the price of the stock. So that typically is not a great way to trade it. So my, you know, the way I'm going to be trading it, of course, I'm going to be accumulating it into the split, and then I will sell before the actual split takes place. So thanks, Ryan, very much on that. Appreciate it. All right, early entry on Denbury Resources, one of my favorites. This is actually a company in a Dallas suburb, Plano, Texas. Denbury Resources. And of course, the question is, where is the entry on this one? And what I'm going to try to do is see if we can draw a reversal line to see if we have the ability. You know, I would say that you could possibly consider, even though it came down a little bit, I think you could probably do an early entry here at about 80. So that's very interesting to me. Strong relative strength, 89. The only thing about some of these oil stocks, you got to be a little bit more choosy than we've been in the last few months, primarily because we're seeing, you know, we're seeing some weakness as on the price of oil, and that is drawing down some of these issues. So we got to be a little bit careful when it comes to that. But I would say that you have a good entry at about 80 here. It's got a good checklist. It's coming into a consolidation pattern. It's about 9% above that. It's got a 100% checklist here, and that is very, very strong. So I like this stock. I've traded it before. I'm currently not in Denbury, but it looks pretty darn good. Pretty darn good here. So very interesting. All right, let's take a look for people on TikTok. Thank you for being so patient. Let's see. All right, so I'm looking here, and okay, we want to look at I think NVIDIA. Let's see. Okay, let's take a look. I think you're talking about what's up 542. What's up 542176. NVTA. I think you mean NVIDIA. I think. Well, so let's look at NVIDIA first. NVDA. Of course, this is one of the great companies in the semiconductor industry. But the problem, of course, with NVIDIA, as opposed to a lot of the other ones, is that it has a problem in that it cannot manufacture its own chips. So it depends on the supply chain, and the supply chain, unfortunately, for chips, especially the very, very high-tech ones, is broken somewhat. Currently, the relative strength on this is 29. I don't like this stock here. I think that you might want to consider, not buying NVIDIA, and instead you might want to buy another stock in the semiconductor area, which I think is far better, and it's trading far better, and that's On Semiconductor, ON. And of course, I do have a position in On Semi. I want to kind of give you a look-see at that. I'm going to flip on over to the comparison chart here, which I think is a good way to go. So let's share out that screen and go for a comparison chart on NVIDIA versus On Semiconductor. As you can see, NVIDIA, if you invested in NVIDIA, you would have lost about 5 cents. Not terrible. That would have been a year ago. But if you had invested in On Semi, and this is the one I do recommend, you would have been at 165. So you're much, much better in terms of stocks. Part of the reason On Semi is doing so much better than NVIDIA is that they make their own chips in Arizona, and primarily their customers are in the automotive space, and there's been a lot of demand in that space. So basically, this is the one I think you should be taking a look at, is On Semi and not NVIDIA. I think NVIDIA is somewhat problematic here, just because they have great chips, great designs, but they can't produce their own chips. I think John is asking, what's the ticker? The ticker that I'm talking about here, the several tickers that I'm talking about here. One of them, of course, is On Semiconductor. The other one is ADI. That's Analog Devices, and so those are pretty darn good. These are two semiconductor stocks. So these are the two semiconductor stocks that I've been looking at, On and ADI. Let's we'll compare them both here. Let's take first a look at On Semi, and there we go, On Semi, and then also Analog Devices. Analog Devices also manufactures their own chips. They do not have the supply chain issues that some of these other ones have. So let's compare some of the biggest chip stocks right now, and that's an interesting way to look at it. So let's compare them as we speak. All right, there we go. Okay, so this is the comparison between the three different stocks here, and I want to kind of show you on the bottom here. That's NVIDIA. That's when you probably don't want to buy that one. Again, great company, but just having supply issues. This is one that I particularly like. It's called ADI, Analog Devices. That's doing a little bit better. That's about quite a bit better than NVIDIA. But the one you really want to concentrate on is On Semi, and that one is doing significantly better. So currently, On Semiconductor is number one in the semiconductor group, and I do think we're getting some nice movement into that group. So that's one you might want to look at as well. All right, Mr. R wants to look at Federal Express and Uber. Uber. Let's look at Uber first. UBER, of course, is the symbol for Uber. And Uber has been sort of in this downward trend. Uber is, that's Uber. Uber definitely has been in this downward trend. So I'm going to share out the screen for Uber for everybody on TikTok here. You're going to see this already. You're going to see this on TikTok, and I'm sharing it out for the people that are on YouTube. As you can see, Uber, and let's go to the weekly chart, has been sort of in this long-term downward trend. You can definitely see it here. You see how that's a downward trend. We don't like those downward trends. They're deadly. Now, it has come up to the 50-day line, but that's not enough. I don't think it's reversed. So I wouldn't be looking at Uber. Let's also look at Federal Express, FCX, and that one is same issue. You know, we're still from about November on, we're still moving lower on that one too. So it has moved up a little bit, but there is a downward trend. Now, I'm sorry, we're looking at FCX. This is Freeport-McMoRan, excuse me. So let's compare Freeport-McMoRan, which is a miner, against Uber. So here's what I'm going to do. I'm going to compare them. And Freeport-McMoRan and also Uber. Unfortunately, I don't think either of them have done all that well. I'm just pulling it up now. There we go. Okay. So, well, actually, they're pretty similar. That's interesting. I would not have thought that was indeed the case, but it is. So let's look at the comparison between Freeport-McMoRan and Uber Technologies. All right, here we go. FCX, this is Freeport-McMoRan. It's done a little bit better than Uber, but they're both not doing very, very well. Not really very good. Really, in the last 6 months or so, the action has been in the semiconductors. So I want to kind of show you the overall semis. I mean, not the semis. It's been in the oil. Excuse me, in the oil and gas. So let's chart this with ExxonMobil, just to kind of give us an idea. If we were just gone into ExxonMobil, which is one of the most conservative, and I'm in ExxonMobil too, by the way, one of the most conservative oil companies, look at how much better it's done than Freeport or Uber. It's just amazing. So the question is, why fool around with Uber and Freeport-McMoRan when you can? It's much better. Not only do you make more money with the safe money, but it's just overall better. So you would do much better with ExxonMobil than you would with Uber or Freeport-McMoRan. So that's kind of the thing here. All right, this is probably the one last question here because we're getting close to time, and this is regarding this is regarding Amazon. And you know that Amazon, of course, did split, and we did have a split on it, but it is starting to repair itself, which is indeed a good thing. It's starting to make a move that's much better here. And here we go. This is the weekly chart. As you can see, we're starting to make a move up. We're still in a downward trend on Amazon, if you can believe that, but it's starting to look better. Let's go to the daily chart and see if it's time to buy. This, I've drawn this reversal line here, so this is when it started to move higher, and so that's been a while ago. Basically, the character of Amazon changed at the beginning of July, and for the last month or so, definitely has been moving higher. Now there is a concern here. There's this gap right here, so we could get a situation where it fills the gap. Would I buy this now? Probably not. And the reason I wouldn't buy it is I want to see it can close significantly above this line here, and that's the 200-day moving average. I typically don't like to buy stocks above that below that 200-day line. So right now, with Amazon, I think you just gotta wait. And it's funny. Sometimes the hardest thing to do in this investing business is to wait. So I would wait and watch list Amazon. I think that's really what you got to do here. I don't think it's time to get in it because it's below that. Because it's below that 200-day. It's below that 200-day moving average, and that's this black line here. So we probably don't want to be in it until it can close decisively above that line. So I would wait on Amazon. I would watch it, but I wouldn't buy it. Okay, let's see. We got one more from TikTok. Tesla prediction. Well, I'm not really in the prediction game here, but I do think that we're going to see Tesla accelerate into the date of record, which is the 17th. So I think that this next week ought to be pretty strong for Tesla. I'm not sure what's going to happen after that, but I'm going to be selling my Tesla on or before the 24th. I'm building a position now, letting it hopefully rise and move over that 200-day moving average, and then I'll be selling it probably then. I think it has a potential to move above, potentially as high as 1,000. We'll see what happens. I don't know if that's going to happen. You know, it's sort of last year's stock, and I do like it. I made a lot of money on it, but it has just been, unfortunately, you know, this has been a tough year. All right, let's look at Apple. Thank you very much for that, because Apple is a bellwether stock. This is really, you know, as goes the QQQ goes Apple. Apple is one of the largest components, and this has been a very nice move. I wish I had been in this one. I am not a good bottom fisher. I'll be honest with you. I am not a good bottom fisher, but it seems like a lot of money, institutional money, is coming back in. You know, they're going where the profits are. It went all the way down as low as 129, and then, you know, it's been making the move ever since. I mean, it's been moving up nicely, and so it's moving right up that 10-day line. The question is, could you buy it here? Well, I think you can buy it here, basically, because we're below that pivot. The pivot's at 182, so I definitely think you could buy it. So right now, I actually, and I you know, I don't normally say this, but I think that basically looking at this chart, that Apple is buyable. Now, I think it's viable now, and I think that that we can possibly move into it. So very, very nice pattern. All right, well, that's pretty much it for me for today. Thanks for watching. Of course, I'll be back on Monday at 7. We get one more question. Thank you very, very much. I'll be back tomorrow. I mean, not tomorrow. I'll be back on Monday at 5 o'clock, and hopefully we're going to see Tesla move higher. That's my guess. Now, get ready. Get ready to sell it, because I do think that once it hits the date of record, once Tesla hits that date of record, that's when I think we're going to see it. That's when I think we're going to see it turn tail and move down. So I think we can make a little bit of money on a swing trade. That's what I'm trying to do with Tesla right now. But I'm going to be selling it the date that it starts to trade. On the split adjusted basis, and that's going to be the 24th of August. Well, thanks everybody. Thanks so much. Now, one thing I want to kind of say, if you could, it really helps me out. Please, please, please like the show. By liking the show, that really helps us. Please like the show, and also subscribe. And if you're not already a member of Dallas Trading Floor, our email, we sent out a nice little email today. Think about that as well. This one's free, and it's at www.Dallas Trading Floor. So please like us. Also, subscribe if you're on YouTube. Really appreciate if you could subscribe. Really helps me out getting these lives out there. So appreciate it. So until Monday at 5, thank you everybody. Happy trading, and I hope everyone stays safe. And I do think that we've got to be careful in this situation right now, because we're not really out of the woods yet, but we are in this bear. We're in a trending down market, but we're in an up phase of that, so it's really confusing. So be careful. Set your stops very, very tight. Try to go in with no more than about one full position, and just be careful. I'm about 45% in cash, actually a little bit more than that. So I'm still trying to find things to pull me into the market. But right now, I'm looking at the semis. Two symbols that I'm definitely really, really looking at. Of course, is on semiconductor and analog devices (ADI). Looking at both of those. Also, I think that we can also look at some of the oils, but be careful with the oils. There's a lot of different good ones, but be very careful. I'm currently in Range Resources. I want to put this one up, RRC, just really quickly show you. This is one that I think definitely is worthwhile taking a look at. It's called Range Resources, and it's right in the buy zone now, 34.11. I do think this one's set up very nicely to move higher. This is oil stock. But definitely one I think that you could possibly look at. No guarantees, of course, but RRC is the symbol on that one. And that one is at the buy zone right now. So definitely you can take advantage of it. So until Monday, thanks everybody. Have a very, very nice weekend and happy trading.